reacting to the ET Now exclusive. So let's take this conversation forward with Gurmeet Chadha of Complete Circle Consultants. Hi Gurmeet, always a pleasure having you in our studios. You just heard my colleague Vivek Iyer talking about that surprise inspection at Aurobindo. The stock is reacting to that bit of news. You know, pharmaceuticals swallowing a bitter pill. If you look at this entire week, Aurobindo still in the green, reacting to this. I don't even want to know where to begin as far as Sun Pharma goes. How are you approaching this pack? What are your top picks?
Hi. See, I think it's not a homogeneous sector. So, and we have seen too many inspections and observations from USFDA. So our top picks in this space is Divi's Labs. We like it because it has a good mix of both generic business, which gives good cash flows, and its CRAMS business, which is contract research and manufacturing and custom synthesis, which is a very high margin business. And they have a great tie-up. Their ability to come in the late life cycle chain in CRAMS is well recognized. So that's one, although it's a little expensive, but that's a better play. Ipca Labs, another one, you know, leader in anti-malarial therapy, has tied up with Global Fund, which is the UN approved fund for malarial drugs. Alchem is another which we like, and the fourth one is Biocon. But as I said, despite corrections, the valuations are still not cheap. So one has to tread with caution. It's going to be a long grind in pharma. So just wait for opportunities to buy on dips in this space.
Gurmeet, you know, the other stock I wanted to talk to you today about was HCL Tech. You know, it's down nearly 7% in trade. It's under pressure, despite, you know, a fantastic deal that's been signed with IBM. It's large in size, but look at the access that HCL Tech is taking. Do you think it'll go to the next level, that today may be a knee-jerk reaction? Also, let's be honest, the markets had no whiff of this transaction being in the works.
I think if you see, the commentary which has been coming from the big 3-4 IT guys is that there's a clear transition from a mere IT services to a software company. And I think it's a step in right direction. Now, apparently 6 products is what they are acquiring from IBM, and that's across the value chain. Also, they had some IP arrangement on these products before this acquisition came in. And to my mind, acquisition, if it creates synergy, it's actually the right use of cash rather than only giving dividends and buybacks. So we are positive on IT. Obviously Infosys, TCS, and HCL Tech in that order. We also saw TCS coming up with a digital power factory, which is basically providing a very advanced backup to the utility segment. So you will see more and more because all these companies are sitting on cash, and you will see more and more acquisitions and growth through the inorganic way. So no, I think it's a knee-jerk reaction. I think we should have a better valuation, I'd say.
Gurmeet, hi, Karunya here as well, joining into the conversation. Just reading through a couple of your notes, autos is something that you're fairly upbeat about. I mean, most people on the street are extremely concerned about the fears of slowdown, extremely concerned about liquidity, cost of ownership going up, and so on and so forth. But what is it that's keeping you bullish on this sector, and by when do you see things looking up? Bullish on this sector, and by when do you see things looking up?
So you're right, Karunya. I think there are concerns when we see MOM numbers coming across. Even tractor numbers were a little disappointing for November. I think what we should see is there is a transient phase for the automobile sector. Just about 2 months back, we had high commodity prices, tight liquidity, delay in festive season, and all came together. I think if you see, all of the cost pressures seems to be receding now. You pick up any metal and that's almost closer to the 52-week lows. We are seeing now, probably you'll see more steps on even liquidity getting better, and financing not be at be a constraint. Look at something like an M&M. It's a 10 times earning multiple. So valuation is something which makes me very confident on this particular script. Maruti also, if you see, we only look at the overall numbers, but the export numbers and the CIAS numbers, which are more of a concern. Their flagship ones continue to see destocking and good momentum. So I think it's a transient phase. One can gradually accumulate, and the consumption story remains strong.
And what about capital goods space, Gurmeet? What is it that's keeping you interested in that space? Is it the capex cycle revival ahead of elections? And by when do you see the upcycle for this sector go on into?
So I'm more positive on the ECC and the industrial space. You know, so if you see the numbers which came in last quarter, whether it was L&T, Cummins, ABB, we saw a very good order inflow. What also impressed me was the deleveraging which is happening, and the profile of the order. So, let's say something like a BEML, we saw a metro order, and it also had, the training aspect of it, the back-end aspect of it. So the margin profile is better. Our top pick in this space is L&T, followed by Siemens. L&T largely because of the order book, as well as the subsidiaries seeing more capital infusion, better valuations coming in. Siemens, if you see, we are seeing the digital factory business and the business segment, doing very well. And at 30 times, it's still cheaper than the historical average. So those are the top picks there.
Okay, so those are some of the top picks that we have over there. Thanks, Gurmeet. Always a pleasure chatting with you.